Global Future Cities program. Next, please. Next one. Yep. So just to start off by giving a very brief introduction on the program, especially on the goals and vision. So with the Global Future Cities, it's a long-term 3-year program by the UK FCDO, which is expected to finish by next year on the program. And there is a significant budget behind this to support projects that will help improve the way cities are planned and managed, mainly on the themes of urban planning, transportation, and resilience, as you can see on the right. There's also the cross-cutting themes of financing and technology innovation. So the objectives of the program is to increase prosperity in our partner countries, to reduce poverty. There is also a legal requirement to address gender inequality issues in the interventions. We like to encourage better quality of life and to drive inclusive economic growth. So additionally, there is a commitment by the UK government to address the effects of climate change and aim for net zero. So literally in 2 days' time, the UK will be hosting COP26, the annual UN climate change conference, where world leaders will gather in Glasgow to agree on global climate action. So with the Future Cities interventions in 19 cities across 10 countries, there is a clear link to support this commitment. Next slide, please. So what we're looking for in the program is to deliver that long-term impact and sustainability. And the FCDO is seeking a step change in capability that would be sustainable. So we would like to see projects sustained beyond the 3-year program period or funded or financed by investors or the government so that they could continue to deliver impact in the many years to come. So that is the kind of return that we're looking for by investing in these programs. So to achieve that, we work with UN Habitat, who is our global strategic partner on the program, to use the SDGs as a metric to measure progress. So as Naomi was explaining earlier, we carry out periodic SDG assessment workshops in the program. We bring in different partners and stakeholders. And these assessments are guided by the SDG tool, which is a very systematic framework and methodology. And to us in the program, it is a very important process to assess them to ensure that SDGs are incorporated into the projects at different stages in a very localized way. So to give an example, for the programs in Malaysia, we gather to assess the projects 4 times over the period of 2 years, implementation period. So that's how frequent we gather. Next slide, please. So some of the challenges we anticipated while designing this program is how can we ensure that the key actors, our delivery partners, our city partners, and so on, are subscribed to the vision of delivering impact and sustainability. So I've summarized in 3 key points here, based on experiences on the program for Malaysia. So firstly is SDG itself is a very powerful universal language, and using it to measure impact, it really resonates well with various parties. The fact that there are already a lot of awareness and the will to adopt these goals, be it with companies or with local government, especially in the Malaysia context. So it is easy to bring people together on this common ground and to use this tool to engage and discuss about the strategic opportunities during the workshops. It's a very helpful space as well to for reflections on top of the day-to-day program delivery. I mean, to have these assessment workshops. And then it's about turning that SDG concepts into tangible actions. So the SDG tool actually enables us, the city partners, the delivery partners, as well as us as the donor, to come together periodically to discuss how we could actually improve delivery of the program based on a set of SDG criteria, which was jointly agreed at the beginning of the program. So as an example, on our project in Iskandar, Malaysia, to develop a smart integrated mobility management system, we have jointly selected about 54 SDG criteria that contributes directly to 11 out of the 17 SDGs. So each time when we come together for the assessment, we would discuss our individual scoring and tick off actions, and then we could see the progress on each goals. So it is a very comprehensive discussion, and in those assessment workshops, we really drill down into details and list out actions and even going to the extent of identifying who should be taking what actions. And of course, it includes really closely monitoring them so that they can be delivered. And in terms of the workshop discussions based on the SDG criteria, includes things like financing, what can we do to increase the bankability of the projects, or things like capacity building. Does the city have the capacity to deliver these green projects in the long term? If not, what needs to be done to close that gap? Or even on inclusivity, are we leaving anyone behind? Who else needs to be engaged in this process? So it's really a very fruitful discussion. And then ultimately, it's about driving that long-term impact. So how can we ensure that these efforts can be sustained beyond the program? So with the SDG tool, it allows us to bring the cities along on this journey. And in a way, it's also helping to build their capacity in delivering projects with sustainability in mind. Also emphasizing the importance of monitoring and evaluation. So this is all done through very practical experience of learning by doing. And the long-term impact that we'd like to see is about how this will help increase the financing potential of projects, especially among impact investors or even big government who are increasingly seeing SDGs as a requirement. So finally, it's about leaving a legacy. So how the SDG tool can be replicated to support other projects in the cities as well. So it is very encouraging for us here in Malaysia to see interest from the cities that we work with to use the tool more widely as they see value in it. So here I'll wrap up my presentation. Happy to take any questions later on. Thank you.
Very good. Thank you very much, Carol. And you have actually left us with the question that we wanted to pose to the panelists that will follow. What is the relevance of this tool, of the UN Habitat SDG tool for urban infrastructure projects? What opportunities are there? What potential do you see to use this to develop projects in sectors beyond those that are the focus of the Global Future Cities program? As you know, the Future Cities program has been focusing on resilience, mobility, and urban planning. And how do you see the potential of this tool to go beyond that focus? And I think, Carol, you wrapped up your presentation with exactly that question. So thanks very much. And thank you to Naomi for that presentation on the tool itself. Let me turn now to the panel with that question. How important do you think this tool is, and how do you see it being useful for projects, various kinds of urban projects in cities? Let me start with Scott Tacker, who is our colleague at the UN Office for Project Services, infrastructure specialist. Scott, a couple of minutes, quick response on this.
Great, thank you very much, and for the presentation and indeed the opportunity to participate. It's in short, I think it's a highly relevant tool and activity that is importantly timed both at the beginning of the decade of action towards the SDGs and indeed the eve of COP26. So I think it's really well timed, and it certainly aligns with work that we've been undertaking within UNOPS around the importance of infrastructure for both the SDGs and the Paris Agreement. We found through research with the University of Oxford that infrastructure can influence 92% of the targets of the SDGs. This is research that we published in the journal Nature. And in a recent publication, we found that infrastructure can contribute towards 79% of all greenhouse gas emissions and 88% of all adaptation costs. So again, infrastructure and ensuring that we make the right choices, how infrastructure is developed across its life cycle, is absolutely key. And so tools such as the SDG tool here, I think, are absolutely fundamental for steering decisions and choices around infrastructure towards sustainability, resilience, and inclusivity. In terms of potential into other sectors, I would say that there's great potential to extend out resilience to incorporate a little bit further in terms of climate adaptation. and also in terms of the climate thing to sort of bring out a bit more of climate mitigation, which many projects do due to the sort of interdependencies in infrastructure. And then secondly, that there could be great transferability into nature-based solutions and the role of nature in providing many infrastructure services. And again, climate and NBS and nature-based infrastructure are thematic areas that are on the rise. So on the whole, I'm really pleased to see this work. Thank you.
Thank you very much. I think all very, very relevant, and you're absolutely right. The timing and the nature of the tool and the importance of making the right choices when you're locking in investments, large investments, and over a long life cycle. So thanks very much. Let me turn from one Scott to another. Scott Zukorski, what are you seeing as the relevance of this tool in your
Sure. Sure, and thank you very much for the opportunity to join the panel and participate today. I agree with the previous Scott's assessment that it is very relevant. Just to give a little quick background on what it is. I'm not sure if the audience is completely familiar with what a rating agency is and what we do. We analyze projects, and my group is the Global Infrastructure and Project Finance Group. So we analyze projects and their debt that's issued off of a project, be it some type of a transit system or a toll road, airport, et cetera, and the ability to repay debt that's borrowed off of the project. And a tool like this gives us an ability as an input to do our analysis and identify areas that are of higher risk than others in terms of incorporating into our cases. So we do cash flow projections where we're looking at debt that sometimes is going out 20 or 30 years. And what I would see is being able to use a tool such as this to help inform our cases and our cash flow projections, understanding where the vulnerabilities might be, and then from an SDG perspective, then what the potential mitigants are and how we can get comfortable. It's fairly obvious that the world is changing and we don't know what the world is going to look like 10, 20, 30 years, but we're being asked as a rating agency to take a financial view. And so having a tool such as this to be able to give us that type of input would be very helpful. And I could certainly see it being rolled out into various sectors of infrastructure. When the group I run covers transportation as well as energy projects and urban development type projects. They have a real estate component to them. So all these factors are very relevant to those, and I would see it as an input for us as we do our analysis, because we're working on behalf of the ultimate investors, the debt investors, to come up with that type of view. So I would see it as being very relevant.
Thank you very much, Scott. And that's a good segue when you talk about investors investing in infrastructure to Tom. Tom, how do you see this? Your role is, of course, to provide subnational governments with capital as well as direction to develop critical infrastructure which is bankable, projects which are bankable. How do you see a tool like this? Does this help you in your work, in your decision making in any way?
Of course, and thank you for having me on the panel. Absolutely, this is a very critical tool. So within the city's investment facility under UN Habitat, where EMIF Group operates at the CIV level, which is the investment stage to take it through that late stage development to bankability, projects that come into the pipeline will come first through the investment portal, which is the initial submission of projects, and then move to the early stage development portion, the CIAP. And of course, UN SDGs is becoming the universal language, the umbrella language for all aspects of financial investments. And I'll I'll add to my colleague Scott at Fitch Ratings, and it's very interesting to see, as well as my role at Sustainalytics, that the whole convergence of finance and ESG, credit and ESG scores is coming to a close. In the industrial, or sorry, in the financial world, the convergence of financial institutions and ESG data institutions has completed. I do not believe there is an independent ESG data provider left on any large scale within the industry, having converged with the financial data and credit rating agencies. So having an SDG tool at that early stage for all projects, whether it's infrastructure or any of the fixed income instruments and financings that are coming forward, no matter how sophisticated some of the groups are, we are still noticing a lack of uniformity of understanding of what constitutes a good SDG goal and what does not. So I think having a tool that brings projects to that mid stage, ready for investments, whether it's through debt or equity, is crucial. So I think we're very excited to align with this, even at on the financial bond side, on the sustainable theme bonds. I'm pretty sure all impact reporting, while there might still be debate on what constitutes impact and the data that drives it, depending on which framework you use, the UN SDGs are agreed upon. So pretty much every commercial offering that I know that informs impact is based on the umbrella of UN SDGs, and most reports will map it out according to SDG categories. So I think having the SDG toolkit, especially at the subnational state or at the municipal level, at the city level, where I think teams are not quite as exposed to SDG project submission as the sovereign level large scale infrastructure projects are. I think this is crucial to make sure that projects can move through faster and actually move to the investment and construction stage. So I think this is great, and hopefully we can see it spread out, not just within cities programs, but across many of the development programs within the UN framework, and then of course to all the DFIs and all the other development initiatives. I think the sooner we all agree on the same tools and the same level of submission, the faster we can achieve all the goals. So thank you.
Thanks very much. Some very, very important points there. I think, as you said, the SDGs are the universally agreed upon framework for impact reporting and impact assessment at this time. But I want to pick on one thing you said, and perhaps ask the other panelists also to respond. You said, you know, a tool at the city level is really important because that level, subnational level, may have less capacity, less experience in perhaps framing their projects according to the SDGs. Than at the national sovereign level. Do you really think so? Do you think the national sovereign level, we have a good enough understanding of what constitutes an SDG positive investment and what doesn't? Are we there yet?
No, I would not say that. Because at Sustainalytics, we see a lot of sovereign level bonds coming to us, and that's increasing, where national governments are committing to climate goals or large scale social impact or environmental impact projects. I think it would be more fair to say that the scale of the projects has attracted more private capital at a large level, the pensions, the large institutions, especially at the utility, renewable energy level. So I think there's just more experience and more exposure and more transparency for the large national projects, which therefore lends to more capacity being built up at the national level government stage to equip for the management and data to present SDG goals. I know our own research and taxonomy teams at Sustainalytics still go through a long due diligence process with these teams as they present their projects to make sure they properly align or are at market and best practices according to the financial world. And again, even the investment banking teams that are helping to advise are quickly ramping up in expertise. And there's still a very evident split between the financial institutions that have built big sustainable expertise teams that can advise whether it's national governments or state or municipal groups on what will pass the market expectations of sustainable impact. So there's still a big spread. I don't think we are there yet, but any time we can get to standardization and speaking more closely on the same language, I think that's great. So no, we're not there. I just think there's a lot more attention there, so people have had more experience to ramp up. Thank you.
I think so. I think you're absolutely right. I think as sooner we can get to that, and what we can learn from what already the learnings that already exist or the processes that are going at the national level. Scott Zagorski, do you think also having something like this at an early stage, as Tom was saying, you know, early stage assessment, development of projects, will that help?
Yes, I definitely do, because I think as we as a rating agency evaluating the debt are focused on the ability to to be able to repay principal and interest, and to have that early on as an input to our case development in terms of the way that we analyze the project is very helpful. And I think what you'll see in the coming years, these types of tools and issues being that much more relevant versus started in the business two decades ago. This was not a topic when we were analyzing. I used to be on the lending side of things, and this was not something that was thought up. And as the world has evolved, and it's becoming more and more important, and because it's very clear what the world's going to look like going forward is going to have and be impacted by these types of things. And so be able to have that type of input early on. And there's two, there's not a sales pitch by any stretch of the imagination, but there's two products that Fitch has in terms of we rate the debt. But then there's also, we have a sustainable Fitch, which rates the ESG components, and you have a green bond rating that folks have likely have heard about. And I see this type of tool being important to both looking at the debt financing as well as being able to assess for ESG ratings in there. And this is, a lot of this is driven by market demand in terms of what investors are craving in terms of scoring from an ESG perspective. So it's very top to mind when I would meet with investors a decade ago. ESG wasn't something that came up all that often, but as years have gone on, and more recently, every conversation is about it. And I think we're just going to be incorporating more of these types of things into our analysis globally, not just in one region versus the other. It's a global trend right now.
Fascinating, and it's important that those conversations are shifting, right? It's very, very important that those shifts are taking place, because unless at that global level, unless the investors, are making conscious choices of where they want to put their money and why, I think we're not going to see the big shift. So that's really good. Thank you so much. There are a few questions in the chat, and I would really request each one of you to look at the chat while we go through the next round of presentations and perhaps respond to those. There is a question around, do you think the SDG tool lacks practical guidance? Naomi can type an answer to that one. Scott Tacker, could you share the study on the impact of infrastructure on sustainability and resilience that you were referring to? Perhaps, Scott, you could also put that in the chat. And there's an interesting one. Have financial institutions been able to drive, to be an instrument to drive more ambition and more ambitious SDG targets? Could they be, or have they been, an instrument? So some interesting elements to think about. But I will leave those in the Q&A and leave you to respond to some of those questions in the Q&A as we move to the next part of this discussion. So now we have two speakers making a joint presentation. Nishendra Moodley, the team lead for Future Cities South Africa, and Dr. Jeremy Gorlick, who is the Senior Strategic Advisor at the Green Finance Institute. Colleagues, the floor is yours for your presentation together. And you will have about 8-9 minutes maximum.
Thanks. Thank you. Good day, everyone. I'm Nishendra Moodley, the team leader for Future Cities South Africa, the delivery partner of the South Africa program. So thank you very much for inviting me to share our experiences as a delivery partner of the SDG assessment tool. Future Cities South Africa is an agile collaborative alliance anchored by PwC, UK and South Africa, and includes Open Cities Lab, Zutari, Palmer Development Group, Violence Prevention through Urban Upgrading, and the Sandler Institute, amongst others, together with a range of independent specialists like Jeremy Gorlick and myself who are speaking here today. We should go to the next slide, which should mention the theory of change of our program. Okay. The South African cities face rapid urbanization while being constrained by the inherited, perpetuated spatial form of the apartheid city, characterized by a mismatch between where poor people live and where economic opportunities are. This inequality is further exacerbated by those living within informality with respect to the formal economy, formal transport systems, and formal settlements. Over the 20 years of South African local government reform, there have been attempts to contribute to inclusive economic growth through urban spatial transformation, but these have been limited, not necessarily because of technical skill, but because of governance and institutional capabilities, both in the national sphere and among city governments. Our programs have been designed to strengthen these critical capabilities of transversal planning and management, whole of society partnering, mobilization of investment, evidence-based decision-making and governance. And during COVID, we augmented this to include the ability to prepare for, adapt to, and recover from shocks and stresses. This program is designed to contribute to inclusive economic growth and the reduction of poverty and gender equality through 2 to 3 year targeted 2 to 3 year projects on transportation and mobility, on urban planning, on resilience, and the innovative use of data, using 5 projects in Johannesburg, Cape Town, Durban, Durban and Cape Town. You will see that this theory of change aligns itself quite strongly with the SDGs. Please move to the next slide, which should refer to the agility approach. In designing our program platform, we recognize that in a multi-year program, the context often changes, sometimes quite radically like it did under COVID. And we would learn new lessons about what worked with the cities and their stakeholders. So we designed our program management systems to enable adaptation so that our programming projects would evolve with new learning. This was very useful in adapting and augmenting our projects to COVID and other national disruptions. So it places a premium on regular program-wide rhythm of learning and adaptation, mostly centered on our quarterly program activities. But project teams undertake more regular rhythms of learning and adjustment. Some even when that they call 2-week sprints or weekly co-creation meetings with their cities. In addition to our strategic reflections, 2 instruments provide useful evidence. One is our institutional change snapshot, which is an annual multi-stakeholder survey of perceptions of changed institutional capabilities, the institutional capabilities I was referring to. The other instrument is the SDG assessments that UN Habitat facilitates, explained earlier, which we're here to reflect on today. Due to time, move on to the next slide, which should refer to the Soweto Strategic Area Framework. Due to time, it's best for us to focus on one of our projects. We've chosen the most mature, but these learnings and reflections are echoed by our other projects. The Soweto Strategic Area Framework has been a 2-year project to produce a non-statutory planning instrument to guide Johannesburg's capital investment and other programs in a defined area that some would say is the core of Soweto. This is Joburg's fourth strategic area framework, but raises the bar compared to its predecessors by its focus on co-creation and gender and social inclusion, its groundbreaking approach to township economic development, and a very strong emphasis on institutionalization through the establishment of a community reference group, through the establishment of internal transversal capacity, through an area coordination team, and the fact that the implementation program will involve contributions from community and business actors, as well as municipal investment. Please move to the next slide, which should refer to the value of SDG assessments. The first SDG assessment was conducted after the draft status quo report. This was a phase that intended to have intense community engagement, but was hindered due to COVID. The second assessment was conducted early this month, after the draft Soweto Strategic Area Framework was available. The team involved in the process found the following. The process proved adaptable. Initially, it was a resource-intensive process of city officials scoring separately from the delivery partner, and then a synthesis. This was streamlined to be an integrated joint discussion on draft scoring pre-populated by the facilitator. The process was different to an audit or evaluation of the delivery partner, as was initially feared. It turned out much rather to be a dialogue-based assessment between the city officials and the delivery partner. The process was found to build capacity. Everyone involved is now familiar with the SDGs and how we need to orient project outputs. We also found that the process is best initiated as early as possible, ideally in the project design stage and even in the earliest stages of that as well. Overall, the assessment proved to be helpful to the strategic area framework. It improved the quality of deliverables through soft reviews and periodic assessment. It ensured that there was early recognition that the SDG alignment relied on meaningfully engaging communities, particularly in terms of gender and social inclusion. This had a tangible impact on refining our approach to community engagement and aligning team behaviors to do no harm and leave no one behind. It provided a constant reminder to the line of sight between the project outputs and methods, all the way to the bigger picture of being a transformative urban project. Despite our good relationship and collaborative ways of working with the city, the process was most valuable in providing a structured format for a facilitated dialogue between the city officials and the delivery partner on the products, on the resulting change desired, and on the institutionalization needed. On the final slide, we should move to the final slide. Thank you once again for inviting me to speak about our experience of the SDG assessment tool. My colleague Jeremy Gorolik will follow directly after this presentation with some ideas on financing impactful projects. Over to you, Jeremy.
Thanks, Nishendra, and thanks everybody for inviting me to speak today. I know that you've taken up most of the 8 to 9 minutes, so I will be respectful of time and try to be as quick as possible. But I do want to reflect on what Nishendra has said and then figure out how this is something relevant for some of our financiers who are on the line. And I think that the most critical thing is the fact that in discussing the way that SDGs factor into planning for sustainable cities within the auspices of the Future Cities program, one of the things that we've been lucky enough to do is to start to think about the way that all of the SDGs end up being meaningful in the ways that we look at cities and the ways that they can raise money. And so part of that ends up being, and as you'll see on this slide, the fact that when we start talking about the tools that cities, particularly those in the countries that are of interest for the Future Cities program, a lot of them are reliant on the traditional funds of sources. So they'll look at own source revenue, they'll look at transfers from national government, they'll look at user fees to a certain extent, and then where possible, lease income from properties and what have you. The things that we have started to talk about, though, are the variety of different tools that are at the bottom of your screen, trying to figure out the best ways and most effective opportunities to bring some of these tools in. As the Scotts and Tom mentioned in their earlier comments, one of the things that we find is that the institutional investors, the lenders, all of the other players who are sources of capital for external sources for cities are increasingly saying that they expect that there's a view of sustainability. And we can't achieve sustainability without having a common language and rhetoric around that. And so the SDG tool allows for that to happen. If we move to the next slide, and again, Nishendra touched on some of these points, but there are two things that really have come through on the projects that I've been involved in helping to deliver. And one is around the work that we've been doing in Durban. So in Durban, we're focusing on transit-oriented development, and how does this come in to be something that's meaningful? When we talk about TOD and the reasons why we have investors that are interested in participating, it's not just because of the fact that there's a revenue stream and that there's a base for this, but instead it's also because of the fact that we can talk about how this directly impacts and is impacted by the desire to deliver on the SDGs. So when we talk about transit-oriented development, of course, transport is going to be a question that people think of, but it's more that question of accessibility for people who otherwise were marginalized and didn't have a way to get around the city. And it's a question of how do we make sure that there's access not just to jobs, but also to education? How do we ensure that there's better quality of life? How do we ensure that there's better access to better quality health care facilities? All of these end up being part of that fabric that becomes so important for considerations, and the SDG tool really helped us to think through that. But it's also that climate finance and that climate resilience side that becomes so important. And so one of the things that's come out in the spatial area framework that Nishendra had mentioned earlier is the fact that when dealing within the community, there's a very strong understanding and appreciation of the fact that we can't make this something which is really continuing with traditional infrastructure. And so people are talking about how do we ensure that the infrastructure we're introducing is climate smart, climate resilient? How do we make sure, for those of you who followed what happened in Cape Town within the past few years as far as a drought, this is something that for a water scarce country like South Africa, it becomes something that everybody's concerned with. And so if we can find ways that, again, using the SDGs as the driver, that look at that resilience, that look at some of these things, it helps to not only shape thinking for the future, but also helps to make sure that this is well articulated in terms of the concerns that financial institutions will come up with. I do want to respond quickly to one comment that came, I think, from Tom or Scott, as far as the reasons why there might be a difference between sovereign and sub-sovereign. And this is something that plagues me in my thinking about the access to finance time and again. And that's just the overall debt capacity that cities have relative to sovereigns. They're typically working with much smaller amounts of money. There's not necessarily the same visibility on the own source revenue they have, and even less visibility on the regularity of transfers from national government. And so I think that that's something that constrains cities, and that's why it's important for us to be as creative as possible and find new ways to unlock capital. Knowing that I've probably gone over time, thank you very much. It's a pleasure to be here today.
Thank you, and we will come back to you in the discussion as it goes. I think there's some very, very important points there, but perhaps your last point is the framing for our question to the panelists, which is, how do you make that shift when cities have much lower debt capacity, as Jeremy was just saying? How do you make that shift from traditional funding sources, traditional financing streams for cities to these additional funding options and to capital markets, to private investors, to DFIs? How do you unlock these additional financing options for cities and for what we call sub-sovereigns for realizing projects that align with the SDGs? And again, keeping in mind how the SDG tool can play a role in that. So perhaps I go to you first, Tom.
Sure, thank you very much. Well, programs like the city's investment facility is specifically targeting groups like this, and all the things that Jeremy just mentioned are those reasons. The subnational level at the municipal level do get overlooked for size, for credit quality, for access to revenue, for reliability and consistency of that revenue. Absolutely, those are the key drivers. Especially as you start focusing on non-OECD countries, that becomes a bigger and bigger challenge. I wouldn't say, I think all those, the DFIs and development capital that we're used to seeing come into these regions, it's all there. I think the largest thing plaguing the municipal or city level is to Jeremy's point, also the size, their access to the size of revenue. So if I'm a multi-billion-dollar fund with a mandate to deploy 60 billion in assets, and I need to get that done, it's much easier to focus on a nationwide level port and a cross-country or regional infrastructure project than it is a smaller size project in a municipality, which just won't move my needle as far as achieving that deployment of capital. Having said that, the smaller programs, especially if we can add some credibility and reliability to the projects at the earliest stage as they come in, utilizing things like the SDG tool, I think it becomes a volume game. And in my entire lifelong experience of how capital works, the first investments are the slowest to come, and then the minute those start to show success, then the rest of them pile in after saying, wow, this is a great program, and let's invest in that space. So I think programs like SIF, there are many other urban infrastructure initiatives that are trying to bridge that gap between need and demand from private capital. And I think the SDG tool is key to that. On the sustainable finance side, coming from the Sustainalytics world, where we spend most of our day reviewing projects and bonds, the innovation, and this is a message I like to bring to everyone in any panel I'm on, any region, the innovation being applied to sustainable themed financing is incredible and inspiring. So municipalities, individual project financing groups, there's a huge demand for sustainable fixed income instruments out there. We're moving to asset-backed, project-specific bonds that are being issued, and coming to the table for these projects with an SDG tool already representing the project, I think is only going to help everyone. So I'll pause there and let others speak, but it's all there. I just think we need to keep the momentum going.
Thanks. Keep the momentum going and get that early stage investment. You know, as you said, the first investments are the slowest to come in, and then money attracts money, and we go from there. Perhaps Scott Tacker, coming from a UNOPS perspective, we just heard Tom say, you know, size is important. If I have to spend $60 billion worth of investment in assets, why don't I go for one instead of 30 of those? Can aggregation help at the city level? You know, it's not just 10 electric buses that one municipality wants to buy. Maybe 10 of them want to buy 10 each or 15 each. Does aggregation help in that sort of way? What are you seeing?
I think that there's there are. Thank you. I think that there are opportunities there to have aggregation benefits, and I think that's from a financing perspective, and also the kind of knowledge sharing aspect that was brought out earlier. That to make many of these projects a reality in different cities, we need to be sort of looking across them and ensuring that we can get stuff done in different places. But also just as an opportunity to touch upon this question, the broader question here as well, around in particular the SDG tool. And my thoughts here were that I think that the tool provides a great opportunity to navigate some of the complexity of the multitude of benefits that infrastructure and urban projects can provide. And that's incredibly important when we think about the kind of diverse range of pots of money, themes, where we might seek to then pull those together in order to be able to get deals done. So I think that it's important to understand where these benefits to be able to communicate to different end users, whether this is for climate finance, development finance, or other kinds of outcome. And I think the second point there, which is in relation to resilience, and this was a point that was raised by Jeremy, and I think it's an important one, that as we would seek to kind of address climate-related objectives as well, this provides a great opportunity to think about de-risking projects from the perspective of continuity of service provision, and as well as sort of broader kind of framing benefits. So I think the SDG tool is kind of well poised there, but this sort of ties back to the earlier intervention that I think a greater alignment with climate change is probably the first big step, I would say, to open up financing options as well as kind of delivery benefits.
Very good. No, those are important thoughts. Scott Sikorsky, how can this help? The main question on your screen, how can this tool help in unlocking additional financing options, shifting from traditional to much more creative, much more diverse financing options?
Yeah, so sure. So, from looking at it from a, whether you're talking about capital markets or bankable, debt instrument that has been referenced before, I think at the end of the day, ultimately what those that investors are looking for is some type of a revenue stream that they can count on. And when we talk about sustainable finance, and we take an example of an infrastructure asset that you want to have a handle that it's going to be there for 20, 30 years out, and being able to use the tool that can to give you that kind of input, in terms of what's going to be out there in the long term. And I think that, when we talk about references, the first money in is always the hardest to get. I think a lot of times what those investors are ultimately looking for is that it's going to be money good, that this is going to pay off, and that the project is sustainable. And from a long-term perspective, I know there were questions before in terms of the size. And I think one of your questions earlier, panels, was about the aggregation. I mean, we certainly have in some areas seen the whole concept of bundling in terms of putting multiple projects together to make them more attractive. I think that the challenge there can become in terms of, what are the legal provisions in terms of how that works when you have multiple different, whether we're talking about municipality, governments that are on the hook. How does it ultimately work in terms of if somebody doesn't have sufficient funding, or one project goes bad, are the others on the hook for that? So that can become a challenge. But in terms of attracting, I think the aggregation or bundling of what we've seen can sometimes work to get that in. But at the end of the day, what the investors are looking for is a solid revenue stream that they know is going to be there, and they can count on to repay the debt that they're issuing.
Absolutely, and I think that's key, isn't it? Jeremy, would you like to come back in on any of this? I know we shortchanged you for time, but any of these reflections on bundling, on the constraints around bundling, on the overall, financing has to happen in that overall governance and policy environment, which has to facilitate these processes. Do you want to come in?
Absolutely. I think that there's some interesting things that are happening across a variety of countries. And again, I'll speak from the South African perspective, since that's the country that I'm based in. It's really interesting to see that there are funds, different opportunities to be able to get to the size that would be of attraction and of interest for some of the institutional investors. Because if we can't get them to that size, it becomes problematic. But I think that there's that other problem, and I'm sure that Scott, from the Fitch point of view, could comment on this, that we're often constrained by the ratings of these different municipalities. And so if you have, let's say you want to bundle together 20 municipalities, unless they're all performing at the same credit level, and I'm sure that you need to do annual reviews to make sure whether they continue to maintain that, you're brought down by the lowest common denominator. So if you have one municipality which is performing at really bottom of speculative grade, even if you're looking national scale, then that means that the entire structure is there, unless you have a credit enhancement or something else. And so I feel like I don't want to get too technical on it, but I just use that as one example to say that there's great aspiration, but at the same time, we have to be really careful that we don't bundle in a way which is unhelpful. And I find that to be something which is often a challenge conversation with as many of you who want to, but I know that for many people that are in this space, when we start talking numbers and we start talking about some of these elements, it becomes challenging, but nonetheless, we're, as was said earlier, different areas are starting to converge. And I do think that finance and development are converging in a really interesting way. And I think that, again, the more that we can use standardized language like what this SDG tool does, the better off everybody will be in being able to make informed decisions. Much the same way as ratings help investors to make informed decisions, I think the SDG tool should be used in much the same way. Thank you.
Fantastic.
Just on that point, what Jeremy is alluding to there is it's the whole concept of the weakest link. So you've got 5, 10, whatever. In some instances, if there isn't a credit enhancement, it depends ultimately what the arrangements are. If the deal can survive, if one is weaker, if there's some kind of over collateralization, but potentially you could be above that weakest link, or if there's, it all depends on what the agreement is between the various municipal governments and whether or not anybody's kicking in to the extent somebody else is short. That's another means, but there's all kinds of I don't need to tell this crew about that, all kinds of political considerations about what goes in terms of one municipality kicking in for another.
Very good, thank you. I think those are all important points. I think the point about bundling, the challenges of bundling, the challenges of whether they're all performing at the same level or who compensates for whom and how that happens. That's one part of the story. The policy and regulatory environment that allows you to access credit and to bundle in these creative ways is another part of the story. But I think the point being that the financing and development conversations, as was just said, are converging, need to converge. The SDG language is becoming and needs more and more to become the common language and the common denominator in some ways for all of the different actors who are planning, financing, infrastructure, who are putting in investments in cities, but also at the same time citizens. And I think what we heard from our colleagues, both in Nishendra said this as well as Carol, that the SDG tool became an opportunity to educate, to build capacity, to build awareness about the SDGs, and to raise the right kind of demand from citizens that investment should be aligned towards sustainability, towards inclusion, towards leaving no one behind, towards climate resilience and climate mitigation adaptation. Both. I think all of those are important points for me and important lessons. I found also it's interesting that you talked about how such a tool or set of tools should come in early, and it's not an audit. That it's a collective enterprise. It's a collective exercise to get the best, the best possible, the most catalytic, the most impactful, and the most bankable investments ready for the city. And how do you do that? I think it's quite, that was to me a really, really, really important point made by the South African presentation, and also from Malaysia. I think those were all important points. So thank you very much. I know that we are, this session there's much more to talk about. If I left the 7 or 8 of you in a room physically, I don't think we'd be able to get you out. But thank you again for a very, very interesting discussion. There are some more questions in the chat and some more observations that we would love you to answer. I should now hand over to Greg Mexcroft, who's going to run the audience engagement part of this session with Mentimeter. So please keep your phones handy. I have mine. And scan this code or go to menti.com and use this code and then respond to our questions. Greg, over to you.
Thanks, Shipra.
As Patricia said, my name is Craig Mextroth. I'm an urban designer and mobility expert with UN Habitat's Global Future Cities program. We just heard from experts on the effectiveness or the potential effectiveness of the SDG tool. And now we want to hear from you, the audience. We're going to conduct 2 minute-to-meter polls to elicit real-time data on what you all think and essentially what you all have heard today as well. As Shipra mentioned, we will be using the data from these polls as part of normative research on the tool itself that the Global Future Cities program is currently developing. So to access the polls, please use your phone to scan the QR code that's on the screen right in front of you. Or you can go to menti.com and type the code 4923 at 3240. So I'll give you a couple of seconds to do that. Also, just to note to the panelists and the experts, if you could please leave your cameras on for this section, as we do have some time for discussion of the 2 polls as we get results. All right, let's switch. Already getting some results here. So the first question is, in your local city or home area, what would an SDG tool be most useful for? I think today we've heard a lot about how it's useful for measuring infrastructure projects, building capacity. But if you could have an SDG tool that your city or your home area actually has access to, what would you like it to actually do? Looks like we've got about 17 responses so far, and so far the top answer is prioritizing budget. I suppose that's not totally surprising, considering the conversations that we've been having thus far today. Coming in second is setting policy, which I think is quite interesting, and social inclusion awareness is at third. Certainly something that the SDG tool really tries and makes a lot of emphasis to do. Bringing JESI issues to the forefront of projects that might otherwise just be about the hard infrastructure has been quite an interesting conversation, ongoing challenge in a lot of these projects. Leave this open for a couple more seconds. We've had about 19 people fill this out. All right, thanks everybody. So it looks like prioritizing budget is currently the highest vote getter, with measuring success of projects as second. So I suppose turn it over to, let's choose one of the Scots. Scott Sikorsky. Does any of this surprise you? Any thoughts on the results of this?
Not overall. It doesn't overall. I think that's generally consistent with our house view here at Fitch for the most part.
Is Naomi on the call? I think, you know, from the practitioner themselves, it's really quite interesting to see, you know, having such knowledge of the actual SDG tool. Naomi, does any of this surprise you? Anything that you have to comment on about the results of this?
Yeah, I think what surprised, of course, the discussions are a lot about finance. So I think it's logical that that now comes out first. I think, and also sort of measuring success is maybe related to that, to mitigate risks. I actually hope that in the end, the drivers are more on social inclusion to make sure that we create more awareness on the SDGs to really ensure that these projects are developed for all, and also helping the planet to recover. So I think it's more an opinion than a sort of reflection, perhaps, but hope helpful.
Sure. Scott, you have your hand raised. Would you like to chime in? Yeah, just to come in on that, I think one interesting observation is that I think that the tool is quite good at doing 4 of the 5 things. So helping to prioritize budget and set policy, and then which is more explicit outcome of the tool, but then more implicitly to raise awareness and engage the community. But I'm thinking here about the second one, measure success of projects, and thinking about projects, as was mentioned earlier, they're projects that often span multiple decades. And of course, this project, this tool is more about the upstream at the sort of at the beginning of the life cycle, which is, as has been remarked, a really important part of the life cycle. But it sort of begs the question, how do we think about sort of ensuring that we have a system of measurement of success of projects, and thinking, do we have a framework for that, quantitative systems of measurements that kind of are on decadal timescales? How do we sort of, to what extent are we prepared as a community to engage with that? So just one reflection. Yes. Fantastic, thank you for that. Naomi, would you like to chime in?
Yeah, maybe to follow up on what Scott was mentioning on sort of measuring success. I think that's also one of the values of the tool, that we are looking at in each of the contexts to sort of measure success. And it's better to also perhaps look at progress in a certain context, because if you're starting to compare, then of course the least developed countries or cities have more challenges to actually attract alternate financing options. So I think that's also something perhaps that this tool could contribute to, and I'm also happy to learn from others what they think about sort of measuring success in a sort of also a progress way.
Yeah, that's exactly right. The tool is used in so many different contexts, and really at the beginning of the program, we set different SDG profiles for each place, just to say this, you can't necessarily compare each project to one another. They have their own unique set of circumstances, their own unique profile, their own unique risks. Does anyone else want to add anything before I move on to the next? Tom, looks like you have your hand up.
Sure, thank you. And I just want to put a different perspective on this survey and the answers. So coming at this through EMIF group and involvement with the city's investment facility, the whole goal is to try and bring private capital to projects at a certain stage to get them to that final bankability stage, which is the gap is the development gap, the required development gap is broad and wide, but it becomes very acute at that last mile. So how do you get the private capital in and get these projects to a level that will attract the global private capital that is needed? And I want to point out that these are great, I guess, categories to judge them on. But what I've seen over the last 2-3 years is SDGs go from a nice to have, and from an urban planning or NGO regulatory guidance to a must have. Sort of like when we were all very young in school and said, well, if you want to start a business, you need a business plan. And what I'm noticing now is, if you want to build a project, if you want to attract capital and investment, whether you are the largest institutional, most powerful investment firm in the world, or whether you are a small municipal urban planner trying to figure out which projects to prioritize, you have to take SDG into account as a material risk issue. And I think I have seen it. I have seen people say, I like your bond, I like your company, I would invest in it, but your ESG profile just puts you outside of what I'm allowed to put money into. And that would be a very generalized example, but I'm seeing this daily increase. So I believe all these categories on this table are very useful. but what I also want to leave the message is all of these aspects need to be in place nowadays before you go out to market to try and attract capital. And that's increasing. We're not all the way there, but I find more and more every day that you need to have all of these 5 categories well in place if you want to see private capital follow behind and get these projects built. So thank you.
Yeah, absolutely. Thanks for that input. So now moving on to our second question. So this is an open-ended question. So you feel free to just type in your answer and it will show up on the screen, and I'm sure we'll get a number of them. But how could an SDG tool be enhanced or made more relevant to your own work or to your own life? This is really talking about localizing SDGs. Is it something that can actually be impactful perhaps in day-to-day life? So I'll leave a couple of seconds for people to respond, think about answers. I'm gonna put one in myself. Seeing a big theme of simplifying. One saying simplify, making it an app, perhaps more usable, more user-friendly. A number of the comments really are about simplifying, streamlining. Yeah, I think illustrating its relation to national SDG profiles, making sure that the strategic context is always there for these local projects, I think is quite critical. I really like the idea of making it visible. How can we make this more visible to people on the street, literally? How can we get people talking about these issues? We've got 16 so far. I'll leave it open just for a couple more seconds to get some, and then we can chat about it. So I guess this is a really good question for the practitioners on the panel today. Perhaps if Carol has any comments or insight into this. I mean, you've certainly been using the tool quite a bit for the last couple of years. So are there any surprises in here? And what's your own experience with perhaps a way to actually improve the actual tool as we move forward with it?
Yeah, I think it'd be good to sort of make the tool more friendly for youth as well, because in our program work, a big component is to engage the youth and to really engage the wider society. So a lot of the discussions that we have is very focused on the government side of things, but we all know for long-term effective projects, we really need to engage the wider population. So I think it would be really important to really cover that part of society as well. So yeah.
Great, thank you. Ms. Chandra, did you have anything to add? Anything on here that surprises you?
Not surprises me. I mean, I think that, yeah, I mean, I think that it makes a lot of sense that the key thrust is to simplify and to be able to make sure that the tool isn't burdensome in the way that it's applied, and can be operated or replicated with as little guidance as possible, and to the extent that it's self-explanatory. I think Carol made that point earlier. But quite important as well is the idea of making sure that it's adaptable to context, because the context and where it's being applied will change, and the level at which, like for instance, this was utilized in an environment of a delivery partner and a city, and the extent to which, like for instance, in the South Africa program, co-creation and the way of working that what was highlighted and pursued to ensure that both the city and the delivery partner were quite committed to a set of outcomes that came out of this, and were able to operate in an agile, co-created way. So having separate assessments proved to be relatively not useful in a context like that, and the whole idea of having integrated assessment between the delivery partner and the city was quite an important adaptation to context. This might not hold in all contexts where there's clearly a different way of working on other programs between the delivery partner and the city. So, thanks.
Thanks for that. Jeremy?
I just wanted to add one observation that I've had, and I think it's that sometimes city officials get just fatigued with the number of different tools and instruments that are out there. And I feel like it's not just a matter of simplifying this, but it's integrating this into others, so that this is not something where people effectively need to say, oh, here's another thing. I mean, to be really frank in the conversation, I feel like in many of the discussions that we're having with city officials, where we're encouraging them to not just look at this with the support of FCSA, but to have this be a critical part of their decision-making into the future, I question how many of these cities will continue to use this particular tool into the future if there's not somebody there to help them. So it is that question of simplifying, but it's also making sure that this is something which becomes a part of the way that they do their general business, and maybe making this something which is integrated into other pieces. I feel like while everybody accepts that the SDGs are a universal tool or a global tool, because we don't know what other planets in the universe might be using other things, but I do think that we need to make sure that we're doing things that become as much of just business as usual as possible. And I don't know if that's going to be achieved unless we make this something not just simplified, but integrated.
Great. Thanks for that. I really could talk about this for a long time, being somebody who's using it every day. But now's the time for our Q&A. And I think a lot of these issues will also get borne out in the Q&A itself. So now if I can hand it back over to Shipra to field some questions from the audience. Thank you.
Thank you. Thank you, Greg. That was very interesting. I was dying to jump in and I thought, no, I shouldn't. I'm speaking too much already. But very, very interesting. And I found particularly the last question, the comment on certification, and a little bit like what Jeremy was just saying, do we need more tools or do we need integrated tools? Do we need more certification? Do we need what kind of certification? I mean, it's a complex question when you go down the certification route. Especially because the SDG Cities flagship program, of which this is also a part or intrinsically linked to, has proposed a larger certification system. So quite interesting, and thank you all for that engagement and for those insights. I have two questions pending from the previous session. I'm not sure we'll have time for more, but if you do want your question taken, then you have to play what we call in India, or what we call in Who Wants to Be a Millionaire, fastest fingers first. So if you do want your additional questions, you had better type them in the chat in the next 30 seconds. But we have two questions pending from before. One, have financial instruments previously been able to be an instrument to drive more ambition, to drive more ambitious SDG targets? I think Tom answered it in the chat, but it might be interesting also for some of the other panelists to take it up. And the second, how might the tool help third sector initiatives, voluntary and community organizations, social enterprises, cooperatives. And Nishandra, you hinted at this a little bit now in terms of joint assessments, joint work. It's not just either or one sector, a delivery partner in city, but it could be more. It could be much more an integrated process. So perhaps the first question to Scott from Fitch. Scott, have financial institutions been able to drive more ambition? Are they?
Yeah, I think they're certainly positioned to do that. When we think about the ESG relevancy and how that's impacting where they're looking to put their money, and I think that's certainly something. I mean, no doubt from the press releasing even as recently as this week, with certain companies making investments in areas as a result of the ESG sustainability considerations, that I think it's certainly heightened it from that, and to the point where I could say, just as an anecdotal example, I know from our own portfolio now, issuers are looking for, when I say issuers, those that are borrowing the money, that are requesting the ratings from us, they're more attuned to it in terms of ESG sustainability considerations, and looking for more disclosures in their financial statements as a result, and looking for us as a rating agency to analyze that and include that in our releases on these topics, because what they're being driven by is the investors, and because the investors are asking them these types of questions when they're deploying their capital and where to put it. So I think it is driving it, and we expect to see more of it.
Very good, thank you. And I think that's important, that we are seeing it and we expect to see more of it. It needs to become more effective. Jeremy?
Just want to jump in with one quick observation. I think that it's great when cities talk about ESG and when they start looking at different exciting ways that they can access finance from new and untapped pots. But I also think that there's a tremendous danger, for example, when we talk about environment and we see cities that are issuing green municipal bonds. There are a number of cities that issue bonds that are refinancing existing projects. They find ways to label them as green because there's not necessarily stringent ways of either categorizing or having strong taxonomies. And I think that actually, it has negative connotations for the work that we're discussing on this. So we talk about sustainability, and some investors feel like they're getting burned because even though there's a veneer of green, there's not actually that legitimate green in there. So I feel like there's a lot of people running at ESG, but not a lot of people who get it right. And some of those cities that are doing that, even those in South Africa that issue green municipal bonds, sometimes I think we need to take a hard look at what that actually entails. Thank you.
Very important, I think. And this brings me possibly to Scott again from Fitch. Do you see that? What Jeremy just said, the greenwashing of some of the previous projects through these instruments?
Yeah, it's certainly out there. I think from a rating agency perspective, we have our criteria. So we have to be transparent. So when we're going out with a green bond rating, happy to provide the information and the background of what that includes, but we're defining it, and that's as a regulated entity, such that a rating agency is, we have to disclose our criteria. So if we're coming out with a green bond rating of X, the market understands how we develop that. Now there are obviously, and it's kind of been a little different in this green bond area, that it's, there's different entities globally providing green bond ratings. And I think since the market is just developing, there's probably differences of what company X versus company Y are doing when they say what a green bond rating is. So I think it's part of it is an education process on the market to understand what exactly constitutes a green bond rating for that entity. I think the credit market has been developed for a long time in terms of how, what a AAA rating is versus a BBB rating. It's understood. Green bond rating, it's something that's newer in the market, and Fitch has its criteria, and that's something that's available for the market participants to understand what that truly means and what goes into making that rating. And I think you'll see more of that as it evolves further.
Okay, thanks very much. And let me quickly go to Nishendra maybe for that, and Carol for a 1-minute response for the other question. How might the SDG framework tool help third sector initiatives? Nishendra, you first, and then Carol.
Sorry, just define third sector initiatives.
Voluntary community organizations, social enterprises, cooperatives, various other kinds of initiatives, not necessarily from the public or the private sector.
Sure. Yeah. So so certainly, I think that there would be value in those initiatives. I think that part of the challenge, however, is just about making sure that it is streamlined and meaningful and context appropriate. I think those are the critical things, and those tools can be able to show value in the kind of non-profit sector and in among social enterprises as a way of demonstrating value and contribution to the SDGs. It would be able to provide a kind of a universally kind of verifiable language in being able to talk about impact and social impact of enterprises. So I think that there might certainly be value in that, provided that it is an efficient thing to be able to conduct and a meaningful thing in that environment. Thanks.
Thank you, Nishendra. Carol?
Yeah, I think one of the key steps in using the SDG tool is really at the beginning to shortlist these suitable criteria. So I think it would be really helpful to actually have a sort of a special toolkit targeted for this sort of because definitely the criteria will be quite unique. And then the other point I'm thinking as well is also on the capacity. Obviously, if we're talking about third sector initiatives, it would be more of communities. So do they have the same level of awareness with SDGs? Certainly in Malaysia context, the government, they are quite well aware of it, but with the wider population, public and all that, I'm not sure if they have that same level of awareness. So I think it's about thinking about creating that awareness as well, and also providing more information or education before they can actually use the tool and understand the importance of it as well, to have this kind of process, monitoring and evaluation. So yeah, some points to consider. Thank you.
Very good. Thank you, Carol. And we are really coming now to the end of this discussion. My God, very, very, very rich. I think there's some things that to me stood out, perhaps starting backwards and starting from that last question, plus what Carol just said. I think the importance of using this tool for building awareness, for building consensus, for shortlisting and identifying the right projects, all the things that were in that question. And the fact that Jeremy said, you need not one, but all. It's not going to be in different, the use of the tool is different in different contexts. Actually, you need to go from a feel-good tool, nice to have, to you must have all of those elements for investments to be relevant, to be effective, to be SDG compliant, to be climate responsive, etc. So I think that's one. Whether you're a large institutional investor or a planner, you really need to take these the SDGs and to take ESG into account. The second thing that came out quite strongly was, and I mentioned this before, the finance and development conversations that are converging. I think it's very important that they are. It's important that they come closer together. The innovation that's coming in terms of financing, in terms of sustainability themed financing, climate themed financing is huge. And the demand is also big. And the more we can use standardized language as the SDG tool promotes, the easier, the better to make informed decisions and the right investments. So that's the other thing. I think we heard that the tool can be, right now it focuses on urban planning, on mobility, on resilience. But as we get into COP, I think it's quite important, as Carol was also saying and others, that we bring in a much stronger focus on climate beyond what we're talking about in terms of resilience. And then finally, bringing people together is a very important dimension of the tool. Interesting dimensions, as I was saying, simplify, user friendliness, context appropriateness came out quite strongly. Certification, I was quite curious. I think it's interesting. We have rating agencies on this panel who do their own certifications. We have as I said, the SDG cities process, which has its own larger certification. Are we really looking at more certification, or are we really looking at the process much more strongly? Then the entire question of bringing this and other tools like this in early, not waiting till the last second or till very late stages to bring this kind of a tool in. And then what else did I have? Yeah, I think I think building capacity, an important tool, you said, for both debt financing as well as ESG ratings. I think that was quite an important point. And I think the ability of this kind of a tool to shift from very conventional financing to much more creative, new financing options and a financing ecosystem that is much more diverse. I think the possibilities are all there. It just means that the team has a lot more to do in terms of both developing this, trying it out, contextualizing it much more, and simplifying it and making it much more user friendly. So those are just some takeaways, but I'm persuaded that this is not the end, but the beginning of our conversation. Thank you all very much on behalf of our audience, on behalf of my team, for joining us today, for your insights, and a big thanks to the audience for your participation, for your engagement. Thank you, Greg and Ryan, the co-hosts of this event today, and for your tireless back of house work that made it possible. Thank you again, and have a very good day.